controlling the money, authorization, identity, and protection. As we move forward from Section 21, where we focused on the balance sheet and financial control, we now shift into a critical operational safeguard in property management, the signature card. While the balance sheet tells you where your money is, the signature card determines who has the authority to control and move that money. In a business where brokers and property managers handle trust accounts, security deposits, and operating funds, this is not just a banking form. It is a compliance and risk management tool tied directly to Arizona requirements under ARS, Parv 32-2174, and broker supervision under AAC, R4 28-1103. A signature card is a document maintained by a financial institution that identifies authorized account holders and records their signatures for verification. It typically includes the account holder's name, contact information, identifying information such as SSN or TIN, the type of account, account number, and the signatures of all authorized individuals. It also includes the date and bank verification. This creates a formal record that allows the bank to confirm whether a transaction is legitimate. In simple terms, the signature card answers one of the most important questions in property management: who is allowed to access and control the money? In property management, this becomes especially important because multiple accounts are often involved, including operating accounts, trust accounts, and security deposit accounts. Without proper authorization controls, funds can be mishandled, whether intentionally or accidentally. For example, if an unauthorized employee has access to a trust account and issues a payment, this could lead to commingling or even misappropriation of funds, both serious violations under Arizona law. The signature card helps prevent this by clearly defining who has authority and allowing the bank to verify transactions against recorded signatures. One of the primary purposes of a signature card is authentication. When a check is written or funds are transferred, the bank can compare the signature to the one on file. If it does not match, the transaction can be flagged or rejected. This provides a strong layer of protection against fraud and unauthorized activity. At the same time, the signature card establishes authorization, meaning only those listed on the card are permitted to act on behalf of the account. This ties directly back to broker supervision requirements, where the designated broker must maintain control over financial operations and ensure that only approved individuals have access to client funds. In many property management companies, business accounts may include multiple authorized signers, such as the designated broker, an accountant, or a trusted operations manager. While this can improve efficiency, it also increases risk if not properly controlled. A best practice is to limit the number of authorized signers and implement additional safeguards, such as requiring dual signatures for large disbursements. This creates accountability while still allowing the business to operate smoothly. It is also critical that signature cards are kept up to date. Anytime there is a change in personnel, such as an employee leaving the company or a new manager being added, a new signature card should be completed with the bank. Failing to update this document can result in former employees retaining access to accounts, which is a common and avoidable risk in property management. Regular review of account authorization is part of maintaining proper internal controls. This discussion also connects to how property management accounts are structured. Some companies maintain separate accounts for each property, while others maintain accounts by owner. Separate property accounts can make tracking income and expenses easier and provide clearer reporting, while owner-based accounts may simplify administration when managing multiple properties for one client. Regardless of the structure, the key requirement is that funds are never improperly mixed and that all transactions are clearly documented, ensuring compliance with Arizona trust account laws. Modern banking systems now incorporate electronic signatures and digital authorization tools, adding another layer of protection and efficiency. These systems can track who approved a transaction and when, often requiring multi-factor authentication or dual approvals. This ties directly back to earlier discussions on technology and operational systems, showing how modern tools can enhance both compliance and security. Ultimately, the signature card is about control. Throughout this course, we have focused on systems, compliance, financial management, and risk reduction. This section reinforces that controlling access to funds is just as important as tracking them. In property management, financial mistakes are not minor. They can lead to audits, complaints, and disciplinary action. By maintaining proper authorization through signature cards and strong internal controls, you protect your business, your clients, and your license. Online discussion. Why is a signature card important in property management? Answer. It establishes who is authorized to access and control funds, helping prevent fraud and unauthorized transactions. What risk exists if signature cards are not updated? Answer: unauthorized individuals may retain access to accounts, leading to potential misuse of funds. Why should the number of authorized signers be limited? Answer: to reduce risk and maintain better control over financial transactions. Multiple choice questions. What is the main purpose of a signature card? To verify and authorize account access. Answer: to verify and authorize account access. Who should be listed on a signature card? Authorized individuals who can access the account. Answer: authorized individuals who can access the account. What is a best practice for managing account access? Limiting the number of authorized signers. Answer: limiting the number of authorized signers. True, false questions. A signature card helps prevent unauthorized access to accounts. True. Any employee can access a trust account without authorization. False signature cards should be updated when personnel changes occur. True. Having more authorized signers always reduces risk. False. Final takeaway: control the signatures, control the money. Because in property management, financial authority must always be clear, documented, and protected.